Alright, we're live from the floor again, and I'm hoping technology is working, and I believe that it is. Alright, so a bunch of stuff to discuss today. Those who have been following my tweets on StockTwits this morning saw that I actually got long this Apple. Originally the idea in the morning meeting was to short it between 634 against 635, and I want to get into this stock, why I was thinking that, why I changed my bias, and what's going on in it. And again, this is a stock that I just don't trade on a regular basis because my focus is intraday, and normally it's not a particularly good intraday trading stock. It just so happens that in the last couple of weeks it's been very good on an intraday basis. On Friday it trended down. On Tuesday it had it put in a bottom and then trended up. And then yesterday there was a pretty big trend move as well. The thesis coming into this morning was the stock is in a downtrend. It tried to put in a bottom on Tuesday and kind of break this downtrend that started last Friday. And again, the first trade, and I'll go over the few trades that I made coming into today. On Friday, with the market gapping up on good jobs numbers, Apple was actually below the prior day's low, so I shorted it. Happened to be at 666 as well, an important number to some, but shorted it this day and caught some of this down move in the morning. Ended up closing very weak. We came in on Monday, it gapped lower. It was a bit of a range day. I didn't touch it, but on the following day I watched it was getting extended. I watched a lot of buying at 630, and then I saw a crescendo into the low 620s and used this kind of bottoming candle here on the 15-minute. As it came down and started to show some support, I got long into the up move around 624.5 and rode it up to about 631 or so. And so those were my two trades. I made a trade that I'm not particularly proud of yesterday in it. Basically this trade, and this is an advanced trade, this is not for people who aren't professional traders. I don't even know if a professional trader should make it, but this is the trade that I made. Tuesday's support area was 633.5. I was looking for it to wick out below that, and when it came back I wanted to get long for a possible move back up closer to the high 630, 638 to 640. I thought better of it after I got it down here. I sold around 636 and I made 2 or 3 points in it, and that was it. But coming into today, as I looked at it, I said to myself, the stock is trending lower on the higher time frame. It tried to break out of this most recent downtrend and it failed. I got to find a good spot to get shorted. And so the idea in the morning meeting was, if I can get short against this area where it had trouble yesterday between 634 and 635 right on the open, I'd be set up for a break down to 620. I love those risk rewards that are better than 10 to 1 in Apple. Those are the trades that I try to make. So I started watching it and in the pre-market, and there really was no opportunity right on the open to get short at this area I wanted to get short. It actually took out yesterday's low. There was buying. Let me zoom in on it so you can kind of see what my thought process, how it changed. And again, I tweeted all this as I saw it. But basically there was some buying here at 625.80 and it caught my attention a little bit. It came back down there to that level again. There was buying again. It immediately ticked back up and moved up 3 points pretty hard to this area right here. We had a higher low at 627 and powered right up to 632. And I started to think more constructively, more bullish on it. I thought maybe that the long-term buyers had put in the low for the week on it, and it changed its tone. So what I did basically was I decided to use this 633 to 635 area as a range to get long against the bottom and be in a position of strength if it broke out above 635 for a move to 640 or even 645. I was prepared to hold some to 645. I actually got hit on this wick right here at a really, what I thought was a very good price at 632.80, and I put my stop below the half, and right before the show started I got stopped out. Now you ask, could I have sold it? It kept on failing here at 635. Sure, I could have sold it, and then it's tough though, because then I would have to have a buy stop in because I'd be off my platform broadcasting. So I just let it play out, and I got stopped out right before the show. We'll see if the weekly low holds at this point. But as of right now, it did fail here. But to me, it's a little bit different. Came down here, looks like it was making a double bottom. Confirmation would have been a strong move above 635. I would have been in a position of strength long from here. You may ask, why didn't I get long when I saw the buyers down at 625.80? You know, I thought about it, but I really wanted the buyers to show me that they could take control of the stock. So if I did get long there, it would have been a quick scalp. I would have sold it for 2 or 3 points. I was looking for the buyers to take control, for it to hold higher, and then capture a trend back up to the 645, which didn't quite work out. Again, if you're watching this, you can see on the left-hand side of the broadcast page, if you're logged into StockTwits, you can add to the conversation, and I'll try to answer a few questions, and I will go over a few of the stocks that I highlighted from the morning meeting or that came up on the radar today. So the first one I want to go over is the thing that caught my attention on the radar this morning was MPC, and we've also had a question on this as well. So first thing we like to do is check what the bigger picture long-term chart looks like. This is a stock in a longer-term uptrend, but today with this down move, and actually threatening to break this longer-term uptrend, and it was something that I was trying to trade on the short side, and I couldn't get any executions. I'll zoom in on it and I'll show you. I was paying attention to Apple and also WFC, and maybe I didn't try hard enough to get a short position established. So it came up on the radar. I saw it as a price spike actually, and it was number 3 I think on the week today. And let's zoom in on it, and let me check back what the exact question was on this. So the question was, could you explain how you would tier into MPC short intraday as it is bear flagged and then finally broke 53.5? Thanks, Steve. Okay, so I started watching it. Let me go to the tick chart, and I'll show you exactly. So I started watching it. It broke through this 54 here. I saw it come down to 53.5. I saw there was buying here. For a split second, I thought about scalping it long, but I didn't, and I said if I can get it close to this 54 level, that's where I want to get short. So I was offering, this is kind of painful, I was offering right here at 88 cents. So what I often do is when my level is 54, I'll initiate a position in the high 80s or maybe even the mid 80s if I see some selling there for a quarter position, and I'll get much bigger closer to the level. So that way, if it doesn't get to my perfect level, at least I have some position for the next down leg, and that's how I like to build the position. So in this case, I didn't get taken here. It came back down to the 50 level again. I guess it held, and it came back up again. The question really becomes at this point, if you're shorting against 54, where are your stops going to be? Because it did actually spend a few minutes holding above 54. I think for me, normally what I'm going to do is maybe cover a little bit above 5 cents or 10 cents. It's a little bit more volatile stock, so I probably have a stop for some above 10. Did it get above there? No, so I wouldn't have been stopped out there. Came above here again. It depends. If I was doing it manually, I probably wouldn't have been stopped out on this wick here. If I had an automatic stop in, I would have been stopped out a half. And the way that I protect against large losses is generally cover half, and if it holds above my level, if it holds above 10 cents here and starts moving up again, get out of the rest. My average risk on the position would probably be something in the neighborhood of 20 cents, and I'm looking for at least for it to move down a point, which would be at least to $53 a share. So the question is how to tier into it. So say, for example, you're in the stock from 54, you notice it can't hold above 54.10, and you're shorted here. For me, I want to start building into the position once it gets below the prior low, the 53.5. So say you're in for a half-size position up here, and it gets below 53.50. What you can do is you can hit momentum here, and you can double up. But just remember, if you hit momentum here and you double up, if it comes back inside of this range, you have to cover those extra shares. This is actually behaving in more of an ideal way, in the sense that if you did hit it below the opening low, you started to see a nice consolidation here in the 20 cents area, and you could build into a position here. It comes down, it puts in its low at 9 cents, it spikes up to 30. I would start to build a position here in the low 20s, and that's where you can get a little bit bigger. Just remember though, you're probably risking to above this spike high here, above 35 cents. So I'll zoom in a little bit even more. Okay, actually the 1 minute shows it a little bit better. So it comes in and you notice they're selling it against 30. You could build into the position right here. You can maybe build in a little bit after. You want to see it hold a little bit longer. And this is after 10 o'clock, so you want to see a little bit longer consolidation. So let's go in the 5-minute. And it's not the ideal setup for getting really big in the sense that after it gets below 53.5, you'd like to see 20. You'd like to see 4 or 5 sideways bars that could really help you build into it. So you could have added on momentum below the half. You could have on a lower time frame added a little bit more here in the mid-20s. But this consolidation only is about 10 minutes or so, and ideally I'd like to see 25 to 30 minutes to really commit to more size. So there, it's worked very well since it's come down below 54. It took out the 53.5, and if anybody hit there, you pretty much should still be shorted. There's no reason not to be short the stock. It's consolidating at the low. Where would you be proven wrong at this point? You'd be proven wrong I suppose if it gets above 53.20, consolidates here, and then breaks to the upside above 35 cents. That's probably would get you flat. That would be starting to look like a reversal pattern. Right now, I can tell you, I'll check and see where it is on the radar in terms of how weak it is. It's number 5, but the thing that catches my attention a little bit about it is it's not a bright red. So it's in play. It's not that in play like INFY. That's very in play. VRTX very in play. MPC not as in play. Probably not even in our top 20 list on the in play list, and it's not even not even the top 30. So that's one thing to keep in mind. Great that it's trending lower. It's well behaved right now, but not the type of volume you'd like to see for a move for it to get to 52. So I'd be pretty careful with it in terms of how much you want to risk at this point. But ultimately, people's eyes, maybe the volume will come in more now that it's below 53. People are a little bit more fearful, and you get some type of wish down to this. And we'll keep an eye on the next couple of days. But overall, pretty good stock, a little bit less in play. Just gonna check back on Apple, see what that's up to. Doing nothing. Okay, a couple more questions. How would you play STX? Alright, so I'm imagining STX you're looking at because it was trending lower and it had some support here around 28.20 the last couple of days, and it took that out. So let's zoom in on it. Okay, so it was bought into the close yesterday at 20 cents, and the prior day low was 28. So it gaps down and is immediately bought, and on huge volume. So quite often when a stock is trending lower and it gaps down below recent long-term support, I like to trade short against this this prior resistance area. So 28, I would have looked to see if there was selling. There really wasn't much selling there. It went right through this 28.20. Looks like it spiked above it and it started to hold. So I would trade short against this 28.20, but something that I would keep in mind is the fact that it gapped down a point below the long-term support and heavy volume came in and bought it up. It's not going to surprise me that if it's actually put in a longer-term bottom here, confirmation of that would simply be it gets back above 28.20 and moves above 28.40, and at that point I'd definitely be looking to trade it on the long side, and you'd want to see what would happen up here at the 29 level. But as of right now, the 28.20 failed, and it's trying to hold below 28 here, so an okay position. If you put the short on against yesterday's support, you use that as resistance. But we've seen some stocks, and I think PAY was the example of it, a stock that made new lows recently and then reversed and it was a really good long, and had similar big volume similar to this. So I'm not really totally committed to this going back to the downside based on the large buying volume. Notice the spikes down here on the open. Couldn't take out the opening low with this huge selling, and then some buying, a nice buy program came in and drove right up pretty well. So it's very possible it could actually hold at this area here, take out 28.40, and I'd be extremely bullish on it at that point. And just looking at it from a long-term perspective, and if it does reverse and gets above that 29, you're looking about 30. You're looking at 30.50, and I'll compare it to pay for you so you can kind of just see what I'm talking about. So here was pay, it was very weak. Took out the 27.50, reversed pretty hard that first day, and the next day just had really nice follow through. And this one it's trying to hold higher now around this 30 level. And if it gets back above 31, I'd take a look at pay again as well. Question about the SPYs. It looks like to me the market is breaking down. What are your thoughts on the SPYs? Okay, so our thoughts on the SPYs are this, that we came down. This area in here, I think, is where we started talking about the market was acting a little bit differently. Maybe we were going to roll over. We didn't. We had a whoosh kind of day down to 143 with heavy volume. We came back up. We did make a lower high, and we've been down, I guess, 5 out of the last 6 days. A couple of things that caught my attention back over here. I don't remember what the news item was, but we had positive news, and then we sold off on it. Same thing happened again last Friday. We gapped up to 147 or so, and we sold off on that positive news. Whenever you're, in a longer-term uptrend in the market, which we have been since June, and you can see we're now pushing against this bottom of the uptrend channel. When you're ever on an uptrend like this, when you start to have problems at the highs, you pay attention if there's positive news and then the market sells on that positive news. The best scenario is it actually initially gaps up and then you see the selling into that news. That's a tell. So we've seen that now twice in the last couple of weeks where we've positive news, initial positive reaction was sold. And now what we have here, for us, our level we're looking at is 142.70, and we're approaching that kind of as we're doing the show here. If we take that 142.70 out and whoosh through it and come back up and we hold in that area, this 140 becomes, a week ago I would have said there was a 20% chance of touching this area. Now I'm up to maybe like a 40% chance. So the odds have increased in my mind. And now as I talk, we're touching that 142.70, and let's see what happens. But what you'd want to see happen here, is in the first time, there's a good chance it could probably stop here and maybe we'll pop back up to the whole number. But if you see like a whoosh through the 70 down to the half, or even in the 40s, and then we come back up, we fail somewhere in the mid-60s, even up to 80 cents, then we start rolling over again. Those are some spots where you can really kind of lay into some shorts and put yourself in position for a weaker close. But again, first time generally you're going to see some type of buying, and that's what we saw. So it stopped pretty much to the penny at our level there, or I guess maybe a penny above it, and you can see the volume crescendo right into that level. I don't remember how I picked that level a few days ago, but 142.70 was kind of my line where we could bounce from, but if we held below there, we'd be in sort of trouble. So those are my thoughts on that, and you should have your market stocks ready to go if we start consolidating down here and we move lower. That does certainly puts in this 140 to 140.70 area into play. I wanted to touch on JP. Actually, it was Wells Fargo I traded this morning. So Wells Fargo, and we've been seeing this a lot. I've been talking about this for the last year. Is we are seeing best entry prices in the pre-market. So it drove down early in the pre-market. We were looking on based on the longer term levels to short it around this 40-cent area against 50, cover above 50, and that worked really nicely. That was the best entry. It actually did touch it again here at about 10.20, and it's still pretty weak. Here's the 6-month on it. It's got to close below 33.80 for you to be a little bit more longer term bearish on it. Here's the 1 year. So overall, and here's the weekly. So, it's still a very strong stock on the weekly, and you'd have to see probably a close. If it closed below 33, that would be have some big time issues. So those were the stocks. That was what I was looking at this morning. And then the lesson of today is on JBHT. And this is something I've been meaning to write a blog post on probably for the last couple of weeks, and it seems like we get a good example at least once a week. And the title of my blog post that I was going to write was "Consider Eliminating This Trade." And the trade is simply this: if a stock gaps up on good news and it doesn't establish a pre-market downtrend and it is not sold on the first move on the open, don't put your energy into shorting that stock. For two reasons. Number one, it's unlikely that it's going to fill if it hasn't established a gap fill, if it hasn't established a pre-market downtrend, or right on the open if it drove higher and then took out its opening low. If you wanted to short the stock, the place to do it would be below 57.40 for a gap fill. when it drives up on the open and it's consolidating, 3.5, 4 points above where it closed the prior day, you should actually be looking for ways to trade this on the long side. You should be buying it against support, and you should be looking for the next leg higher. Another example of this is SRPT. Here's the 10-day. On day one, we saw a drive in the pre-market higher, up to $35 a share. We saw a buyer right on the open at 30. It closed at the high that day. A couple of people wasted some time shorting it on day one. What's going on in day one is there's euphoria. There's people trading the momentum. They're just squeezing everybody who's short the stock. On day one, every once in a while, yeah, it might reverse, but usually you're going to see that happen in the pre-market beginning a downtrend, where you're going to see a move right up on the open where it comes down to this 30 here, it holds lower, then trade it on the short side. Not after it rallies up 12 points and starts flagging. Look for that stock to trade at the low. Now you'll know I did tweet and talked about the stock for a few days after that first day. Basically, it made a new high the second day and then started to trend lower, and I thought it was a good short the second day. I thought it was a good short the third day. I thought it continued to be a good short, and it still looks like a good short. It's right, actually, coincidentally, it's at this 30 level where it rallied from on day one, and I think people should be watching this at this 30 level to see what it does. It seems to be holding it right now. Here's today's action right on the open. Some buying came in at the 30. It's right back down here again. If this stock closes above, let's say, 31.50, it most likely is going higher. It's probably going at least to $35 a share. But the lesson is, on day one, fresh catalyst, focus on the long side on the gap ups. It's a waste of your energy. And what happens if you don't focus on the long side? If you're thinking about the short, you miss the 10-point drive on the open. You miss the second 5-point up move. So that's the trading thought / lesson of the day. And I will look to maybe take Veritech. What's my thought on JBHD? Well, I think that pretty much covers it. I'll zoom in on that for you, VTech. Again, VTech, the person who just asked the question, Veritech SDF1, is actually a very experienced trader, and you notice that he's focused on the long side. It looks good, VTech. I mean, I think the better long is probably closer to 60 cents, looking at the flag, at the pennant. I think you're probably looking for a move above 59.20 for confirmation. And in terms of measuring the move, let's see here. So we have 58.5, 59. So I think we're looking around 60. If you add to this position above 59.20, I think you're looking about a point from there. So probably about 60.25 would be your target. You always got to be careful at the whole numbers at that $60 level. So that's that. Probably should check back in with VRTX. I didn't talk about it in the morning meeting today, and the reason I didn't talk about it, it was very in play yesterday, but I just, what do you make of this? Good news comes out, supposedly good news comes out, they drop it out to the weekly support. Then they rally it back up to $60, it fails, it closes weak, so you think, I guess maybe you could think it's a short there, but it's just very unclear to me what it's doing, and that's why I didn't talk about it. It did take out the afternoon support and is right back at yesterday's low. But to me, not particularly gameable, and that's why I chose really not to talk about it in the morning meeting. The reason I'm talking about it now is it happens to be number one on the radar for week today. Maybe let me talk about INFY. This was the other thing that caught my attention right on the open. INFY is number four on week today, and it's this kind of looking a little bit like it's putting in a bottoming process. There's some selling here at 43.80-ish. So keep an eye on this. So the morning it comes down, it goes back up, fails to do the reversal, comes back down, but it doesn't even really test the low from the open. It's moved sideways here. So it comes back down. Just want to zoom in on this for you. So basically what we have here is it starts the downtrend right on the pre-market, hard down move on the open, comes back up, holding a little bit higher. It doesn't get above 43.80. Comes back down again, doesn't make a new low. If somebody was actually trading this on the long side against this 43.30, if they saw some buying here, position themselves for the break and the reversal, I wouldn't have that huge of a problem with it. but your confirmation is some type of consolidation above 43.80, and if that happens, maybe you catch the move back to 44.60 to 44.80 or so. Alright, I think that's kind of a wrap for me. And I just want to check back in with the SPYs one more time, and you can see this is kind of setting up kind of nicely, right? It went down to our level here, and it's consolidating against it, and it's not bouncing really much at all. So here you can see the reaction move was to 88 cents, and now it's very, very much under control here, and if it breaks to the downside again, probably good chance we go much lower. The one pattern you want to be aware of, though, is if we do break to the downside here, say we go 20-30 cents lower and we get back above 90 cents, that's a bear trap. So you want to see it break to the downside, then fail here somewhere in the 80s, and then move lower. And I'll tweet about what I see and what my thought process is. But as of right now, our low is at 71 cents at our longer term support level, and it's flagging against this 88 or so. Thanks for joining us live. We'll be doing it Monday, Wednesday, and Friday. On Fridays, we might have guest traders from the desk handle the show. And please take advantage of the stream that's built into the broadcast page for asking questions. I'll cover at least 3 or 4 a day. Have a good weekend.